And out of curiosity, I noticed we have at least one lawyer in this room. So I think one question this person is probably interested to know is, so many people owning one thing, right? How do they actually own it? How do you actually make a decision? So if they want to put it on an exhibition, where does it go? Like, how do you decide?
So DAOs have their governance structures, like a vote that people will collectively take because they collectively own a property, own this asset. Sometimes this is like a conversation where you have societies where collectively all the flat owners will take decisions on maintenance, multiple elements. It's similar governance. So there's a governance set before somebody signs up, and they agree to conform to it. And there's a voting mechanism. There'll be a 60% or 70% threshold. So you'll be bringing in all of these elements to run these activities. Typically, there's maybe 10 to 20 people who take more charge and are delegated access for taking the final in-person physical decisions.
Right, like a company.
Like a company, yeah, you could say that, yeah.
Right.
In many instances, yeah.
Yeah, and then zooming in, I'm going to throw out some numbers.
Sure.
I read the World Bank report, and it says like we still have around 1.4 billion people, adults in the world that are unbanked.
Yep.
But if you look at the tokenized real world asset market, it has grown over 300 times in just 3 years, now standing at $25 billion. Yeah. And we're talking about tokenization. How does that help wealth inclusion? And you talked about a little bit on that concept. I just want to zoom in a bit. Like, does tokenization actually reach those people who are unbanked, whom we actually want to help? Or is tokenization actually helping the wealthy guys getting richer or wealthier?
Great question, right? Quite often when we think about digital finance or financial inclusion, very, very important element, right? 1.4 billion, that's 20% of the world, still unbanked, right? In certain emerging markets, people have more Facebook accounts and probably now more TikTok accounts than bank accounts, right? Systemic issues, threshold for accessing banks, etc., is very, very challenging. So how did central banks and governments, etc., solve this to a certain extent? There were much more. There were $2.5–3 billion people who were unbanked a few years ago, largely through digital wallets and mechanisms that allow you to own a wallet, like a payment wallet, like an Alipay or a PayMe, etc., which has a much lower KYC requirement. In fact, you could, in certain instances, open that wallet without having done full KYC, but there will be a restriction on, say, 2,000–3,000 Hong Kong dollar transactions only, right? And there's caps, etc. This is to try to bring people into the digital finance world, right? That's not a full bank account. So you're not owning a bank account, but you're owning a mechanism to do payments, right? Now, when it comes to tokenization, I am of the belief that tokenization per se is not going to move the needle much for financial inclusion, right? There are elements of digital assets such as stable coins and others, which are helping with some financial inclusion in markets where the financial system or the economic system is not great, or there are high inflation, etc. So, you want to do a remittance or a transfer, it's physically not safe, or your currency is falling rapidly. You would then use a stable coin or a cryptocurrency to make this transfer. So there's more stability in your income, right? Or what you're transferring. But that is helpful, and it's also lower rates as compared to, say, standard remittance. But when it comes to tokenization broadly, I don't think it does make too much of a difference to financial inclusion. I'm ready to be challenged and corrected. If others have a view, please do let me know.